Stocks advanced on Friday with equities recovering some losses after closing out a very volatile September in the red. The Dow outperformed the other two major indices as shares of Merck jumped after the company released positive data on its antiviral pill. And with that, the Dow posted its best start to October since 2003. The S&P 500 also gained as cyclical stocks led the way higher, and this was the S&P's best start to an October since 2007. But let's not forget that September was a downer for most investors. The S&P 500 ended a 7-month winning streak in September, down about 4.8%. The Dow ended September lower by 4.4%, and the Nasdaq underperformed, losing 5.4%. But with all this doom and gloom, we need to keep in mind that a 5% pullback after the market basically doubled in 15 months should be expected. So keeping things in context, there's a lot to worry about, but many of the worries have low probability of causing long-term problems for the market. And to keep things in further context, the S&P 500 is still up about 15% so far year to date. But be prepared for more choppiness in the markets because we still have the Fed tapering and the never-ending District of Columbia drama. And with that, let's take a look at the charts. And so starting out October, as usual, there are mixed indications. And in this case, the 2-year weekly chart gives one indication, and then the daily chart gives a slightly different take on things. But let's start here with the 2-year weekly on the spiders, the SPY, and the close on Friday was 434. And basically, by this chart, everything looks pretty good for the most part. We did come on down here to the 20 EMA and we're resting right on it as we did back here and also back here. Are we going to be able to recover next week or the week after? Well, let's move on down and see what the indications are. The volume's not going to be able to tell us too much, but here in the MAC, you can see that the fast line is continuing to accelerate on the downside. Now, this level there of the fast line versus this level here of the slow line means there's a pretty good separation, and it seems to be increasing. So I'm not quite sure that we're going to recover next week. But that's just here, the 2-year weekly. Again, into the histogram, you can see that the acceleration on the downside hasn't stopped. There's no bottom or basing yet. Now into the price rate of change, this doesn't seem to indicate that there's much of a problem. We're still above zero, and the fast line and the slow line are moving in tandem. So another mixed indication. The RSI is actually showing things are on the downside. Just moved through that 50-year midline on the downside, and I don't see any indication of it stopping yet. It might, but we don't see anything yet, and we don't see anything there with stochastics nor with the Williams. So back on up here to the price chart, and this is just indicating that there is a possibility and maybe a probability that we have more choppiness in the next few weeks. So let's now go to the daily chart. And now into the 6-month daily chart, and we see a little bit different of an indication. Beginning here in early September, that was the top. We had a pretty good move on the way down. We did have a recovery up to this point here, but then we had a second move on the way down. Now, this is somewhat similar to late May and into May, where we had a top at that point. We more or less had a dive down here, a recovery up to that point, and then another downward draft. But at that point, the market recovered and we headed on up. So somewhat of a W in there. Are we going to do the same thing here and head back on up? Well, let's see. I think I have a bit more hope, at least as shown by the daily chart, than the weekly chart. But here we can see that we've had a pretty severe downward trend all the way through here, pretty much the entire month. Going back here where we were looking at before, this was not as severe, and the fast line essentially stayed at the zero line or above, and so it was able to bottom and base there and then recover. But we're under the zero line. We're pretty negative at this point here. We only see a slight attempt at a bottom and a basing here by the fast line, and that's not too convincing to me. Into the histogram, and we find some other information that gives us more hope. This level here to here shows that we've had improvement, and definitely on Friday even more improvement, but that's not enough information to convince me. Into the price rate of change, we have a nice bottom and basing pretty much in the early stages. Again, not enough information. Here into the RSI, this gives me more hope. This is probably the best oscillator, a nice bottom and basing here, and it's heading on up. So I like that. So an indication that we might have a recovery into next week. The stochastic seems to echo the other oscillators. And then again, the Williams, this is a pretty nice bottom and basing in here. Spent plenty of time in that oversold territory under that negative 80. We just came out on Friday, but again, still that's pretty early. But for the most part, the daily chart gives me more hope that we are going to bottom and base and perhaps recover next week. The only problem, we have the DC clowns. So who knows what's going to happen. So I would say let's wait and watch into next week to see what happens. But at least by the daily, we do have a little bit of hope. And for today, that's ChewDog Charts. Thank you.